we're going to move to Steve's stocks. And Steve's first stock, IMPY, should be KBH. Let's put that up for Steve. But he's going to introduce himself first.
All right, my name is Steve Chappell. I'm the Director of Trading Systems Development here at VectorVest. Man, I've been around 19 years now, so it's been a fun ride, and lots more years to go. I'm hopeful for anyway, God willing. So let's get to the actual chart then, I guess. So with KB Home, one of the things I like about KB's is its price structure in the industry. All of them have looked pretty good. This one on a day-to-day basis doesn't cause you a lot of heartburn typically. Right now it's hitting a new high. It's showing a little bit more strength even today than some of its peers are. Had a little bit of stronger acceleration with earnings, albeit mostly by way of a pop here in late September, early October. But I don't expect the strength in the home builders to dissipate here over the coming months either, given the current economic climate that we're in and low interest rates and lots of fun things going on like that. But in fact, that's probably in large part why we're getting some good run out of the home builders altogether. But anyway, all of that personal stuff aside, kind of feelings, emotions, and those kinds of things, just looking at the facts, it's got maybe the stronger earnings growth here recently, should give it some stronger push, all things being equal. That's always been my experience. The higher a company's forecasted earnings pushes, the more potential it has over the next 1 year period. So I think that we're in good water here with KB Home. They're all good picks. They're coming in, this stock's coming in at a premium now. It's trading above what we would call fair value, but that's going to be true of many stocks on the backside of a 9 to 10 year bull market that are of any kind of good value. You're typically going to be running at what we would call trading at a premium at this stage. So we're not the only ones that know about it, and it's on a good run, and that's why I picked it.
Yep, you're also getting a nice little breakout here of your 6-day consolidation.
Yep, right. Had a nice little mini pullback.
Yep.
I'd just be careful on volume.
Yep, volume is dissipating a little bit. That's always a little bit of a mild concern, I would say, sure. So the guidance on when to buy, for me it's always twofold, and it's always the same. I'm certainly willing to buy KB Home, even on the light volume, with a higher move at the open tomorrow, to the tune of about 12 to 13 cents. Take your pick. I tend to use 12.5 by the book. My brokerage allows me to do that, but that would be my guidance on when to buy it if it continues to rise. If it doesn't continue to rise, but the industry remains healthy, I would consider a pullback to that 20 MA as another opportunity to find a couple of kiss candles, or at least one. Look for the higher open the following trading day, and this similar tactic, just playing a little bit of a pullback from that perspective. So either way.
And actually that happened back here.
Yeah.
When it pulled back, and look at that pullback, that would have been a good day to get in.
That's right.
And now you would have held it, and you still would have been happy.
Yep.
Looking at the indicators, and there's not a ton of indicators that we're looking at. We're looking at very simple indicators. And the more you simplify your investing, the easier it is to make money without pulling your hair out, biting your nails, all that stuff. Keep it simple. Keep it simple, Steve. There it is, the KISS method.
Well,
keep it simple, Steve.
This last little bit, it might seem like maybe the least important, but it's potentially the most important, the order execution side, because if you looked at my 2 picks from last month, the order execution would have saved your bacon, because neither one of them would have triggered. So it's a very important ingredient. No matter how good the chart looks and no matter how good things truly are, the stock can still fall out of favor. So the order execution, knowing where your stops are, all those things are, knowing when you're going to get in before you do, those are always very important things to know. So next stop?
Yes.
Because we're getting a little crimped for time, I think. So we're going to go gold. I don't believe that the run in gold is over. I think the economic uncertainty that is so prevalent everywhere you turn and look these days will continue. It seems like from some of the comments we had yesterday from Mr. Powell that he was very clear, wasn't he? I don't know how many, did you guys count? How many times did he say this is not QE?
Yeah.
and then would make a dramatic pause and say it again. This is not going to be QE. I think any kind of interest rate reduction in the future and a little bit of a leveling of the playing field across the global economic situation that we're in only adds to the fire. Certainly doesn't hurt. One thing to watch would be the strength of the dollar, because even if we find ourselves, in a declining interest rate environment, it's possible that the dollar stays strong because Europe is experiencing a ton of pain. I saw Australia last month go negative on their interest rates. There are 7 countries worldwide now that have negative interest rates. So it's an interesting time that we're living through.
I hope we don't get there.
I know, but I hope all of this, I think rather, all of this uncertainty just kind of adds to the fire here. And it was funny for me watching the comments on that thing with Pal yesterday, how everybody was pushing Bitcoin and all these other things as alternatives. But I think gold is a real alternative, and this is one of the bright spots in all of the gold market. Their earnings growth is tremendous. There's others that I liked. I think maybe somebody's got one today. Kirkland Lake is one that I presented a couple of months ago. I still think that's best of breed in all the gold market. But this is more of a, I wouldn't say small company, but more of a, potentially more of an explosive kind of a pick. Put value on there real quick, Glenn. I mean, this guy's tracking $6.51. We got it valued at near $10 and climbing. And a large part of that is due to the acceleration in earnings growth that they have. It's super hot right now. And I generally don't like buying stocks when we're this far extended above the 20-day moving average, but my recipe never changes because I'm willing to use that kind of as a guide going forward on the trade. So a higher move above the high today or a pullback to the 20, just like it pulled back about a week ago to the 20 and popped, I would look for entry into Sibanye, one of the strongest growth stocks right now in the gold market. And I'll leave it at that.
And interesting that it's a sub $10 stock that's undervalued and moving up, and earnings per share. This is like the best of all worlds put together in one stock. It's hot, it's undervalued, and it's growing in earnings. So, and it's above. So that's a good roundabout hot stock to take a look at. All right, you ready for your next stock?
Yeah. So we're going to go with the wild card pick. This was a hot stock pick from this panel a couple of months ago, which could have produced, conservatively about a 15% gain off that earnings move. Last time earnings was announced, we were looking at how well it was holding off of support, Glenn, on that pop right there. We were looking a couple of green candles to the right of the red pullback candle as our entry last time, and the stock continued on a pretty good run. You had a couple of things come out to hurt this company. This company, first of all, for those that may not remember from last time, was up more than 400% this year. And that's because they are one of the strongest growth rate stocks in all the stock market. There was a crazy report put out by a company that will remain nameless, and there was some talk on a very important talk show hosted by CNBC that all kind of collided at the same time, and really. I'm happy to see that we're back to levels pre-last earnings announcement where they said that they had 60% earnings growth for the foreseeable near future. I think it's an interesting level to think about this stock again. The reason I have that moving average on there, is that a 40 or 50?
That is the 40-day exponential.
All right, so I'm using a 40-day moving average here on this one because just trying to get a little bit of a leg up on the potential for renewed interest on the institutional side, which will generally come in around the 50. I'm going to like this stock a lot more, guys, not tomorrow, maybe not even the next day, but as it starts to move and separate above the 40, even the 50 average, and really take out that prior swing high, that's when I'm going to be licking my chops and looking to buy end phase again. I really like the run potential for the next month or so because their next round of earnings announcements comes on November the 5th, if I'm not mistaken. I believe that to be the next earnings date. You can look that up just to verify, but that's my recent knowledge. And I find it hard to believe that there's going to be a lot of short interest on this stock or things like that heading into that next round because over the last two, All they've done is improve and blow estimates out of the water 2 consecutive reports in a row. So I think with all of that, I think it sets up well for some pretty good stock price appreciation, at least into the earnings announcement. I would much rather be maybe in a call calendar spread, or maybe even sell a put to finance a call in advance of that earnings announcement. And in other words, desensitize my monetary investment at least out of the gate, be willing to be put one of the strongest growth stocks in all of the stock market if things went south, and having a free ride if things go really good. So that's all I have to say about Enphase.
And when we were looking at this, one of the first things I said to Steve, I said, this is a tough pick.
It is.
But I like the way he justified the pick in that, look at that, hit that. I drew this level up here, just eyeballing it. A good level of support sitting at about $20.10. Bounce, went up, creates another level of resistance, actually, if you look at it. And where are we? We're right there. So the stock is doing a little bit of sideways mambo, all right? And look at that.
Again, we need to get above that level before we're interested anyway.
That is absolutely right. So now looking at getting above that moving average and then compound that with getting out of that level of resistance, that last swing high, man, the stock does have the ability to run up to that next high. Biggest thing that I do like about that is that the earnings, no matter what was said on TV or what company said, whatever they said about the company still makes money. The company still makes money.
Yeah, they had their largest order on record just about a few weeks ago out to Australia. So I don't see at least any signs and symptoms of any kind of slowdown. From what I've seen so far, they call it an earnings surprise for a reason, right?
Yeah.
But I think above the swing high, we're back into good water here, and most of the craziness should be behind us at that point.
Yeah, my take on it was that after that run, right, they got caught up in that rotation out of growth.
Yep.
And a bunch of profit taking.
That too. I mean, all that fun stuff was kind of all happening at the same time. Man.
It was the convergence. It was the perfect storm. It was the perfect storm. I like that. That's a good movie, by the way.
Yeah, being up 400% in a calendar year, that's actually a pretty mini pullback.
As long as it's hitting lower highs and lower lows, I'm staying away from it.
Yeah, for sure. Yeah, again, you just got to take out that swing high.
Thank you for taking the time to watch this video. Now, if you're new to the software or would like refresher information about the software, click on this Getting Started video right here. Thanks to all of your input, here's a YouTube video that we think would be perfect for you. Click right here. If nothing else, folks, just hit the subscribe button right here.